Hey guys, I hope you all are doing well. There is a very common mistake in SA 570 which many people tend to commit. So I don't want you guys to be committing that mistake, so this one's for you. So in SA 570, when a material uncertainty in relation to going concern exists, it can be bridged into two scenarios. The first one being where the going concern assumption in itself is not appropriate, and the second one being the case where the going concern assumption is appropriate. If we have to first look at the case where the going concern assumption is not appropriate, it gets further bridged into two scenarios. The first one being where the management has disclosed the fact that going concern assumption is not appropriate and has appropriately followed the liquidation basis of accounting. In such a scenario, the auditor would express an unmodified opinion and would give an Murg Para, not a Murg Para. You guys would be wondering why. This is because a Murg Para comes into play only when the going concern assumption is appropriate. Here, the going concern assumption itself is not appropriate, so an Murg Para is used. The second scenario in this itself, where the going concern assumption is not appropriate and the management still follows the going concern basis of accounting or has not disclosed the fact that the going concern assumption is not appropriate, the auditor shall express an adverse opinion and not a qualified opinion, because this is a very serious scenario where the accounting itself is entirely misstated and it has a pervasive impact on the financial statements as a whole. I hope you understood this. So the second scenario which we are talking about, where the going concern assumption is appropriate, in such a scenario where the management appropriately discloses the facts, then in such a scenario the auditor would express an unmodified opinion and a Murg Para. So a Murg Para would come into play here because the going concern assumption is appropriate. However, management does not appropriately disclose this fact or there is an under disclosure. In such a scenario, the auditor would either give a qualified opinion or an adverse opinion depending on the pervasiveness. I hope you all found this insightful and understood this. For more logical shots and for more content that's brewing on its way, do support, do share, and do subscribe, and do hit that like button. Thank you.